What do you say? Let's check back in with Rich Nelson of Allendale Incorporated in McHenry, Illinois, to find out the latest on the grain trade. And boy, I tell you, Rich, thank you for joining us. It has been a negative go here on the grain trade all day long. It started in the overnight session, not so much on the soybean trade. They held firm for a couple hours last night on the Globex trade after the crop condition report came out. But then they, I guess, had so much spillover pressure from everything else, it looks like they kind of caved in later on in the session on the Globex market. And they went sharply lower today as well. So before we get into our analysis, let's get everybody updated on the futures, and then I'll get your take on this here, Rich. Let's look at corn right now. And as it stands here in the midday, we currently have the September corn now trading 5.5 lower. And you have December new crop corn down 6 at 370 1/4. We're only one tick from our low of the day. And on the soybean trade, we have that September contract now down 7 1/4 at 925 1/2, and you have November down 10 1/2 at 927 3/4. Both of those are within a penny of their low of the day there. So on the first two, corn and soybeans there, of course, we had the corn condition nationally went up a couple of percentage points. That seemed to be a surprise to the trade. Soybeans did go down 1 percentage point, down to 59%, good to excellent. But your thoughts on the trade reaction to those numbers when they came out? Is there more behind this than we think?
I think this is more or less like a contributing story here. I think the crop progress certainly is a leading issue for us. Also, we can talk about this week's rainfall, which may be making up for some of the shortfall in the past couple weeks for many areas. And last piece of kind of news here, we still have maybe some discussions about this NAFTA, which will be starting renegotiations here tomorrow. And also, we can talk about the issues with the President Trump yesterday authorizing an investigation for intellectual property rights for China. That's not really a big issue for us, but it could maybe spill over into some moderate concern for us in some trade talk, too.
All right. Now, on the I-80 corridor, you and I talked earlier today about the fact that Nebraska corn condition went up 4 percentage points this last week alone. Iowa did go down a little bit, but all the other states went up in their condition ratings. And if you look at soybean condition on that same corridor, we had all the states higher than they were a week ago, except for Illinois. Now, they dropped 1 point. So I wanted to take a look at that, along with the fact that on the Dakotas, we actually track the crop conditions, if you will, on an assortment of things in South Dakota and North Dakota where the drought has been going on. And it looks like in the South Dakota region on the crops, we had corn actually improving 5 points and soybeans went up about 2 points on the crop condition. North Dakota actually went up 8 percentage points on their corn and 7 on the soybeans. That was a bit of a surprise right there too, wasn't it?
Certainly was, and I think at this point in time we're basically pointing out that, hey, those rains over the past couple weeks for those select areas were certainly good, and you can almost argue that I wonder how Minnesota was only up 1%. Many producers up there suggesting things are still doing fantastic for the most part. So as you mentioned, a lot of our key areas which had been dry during the corn pollination phase, now as we're talking about soybeans a little more in depth, maybe we're seeing some maybe things not too bad as much as they could have been here.
Yeah, I actually had one producer in Minnesota tell me just the other day, they said things look great, but shh, don't tell anybody. So that's kind of the way it goes in different parts of the country. Quick look at our cotton market, and then I'll pause for a break here, and we'll talk livestock here on the other side. Right now on the cotton, we have that October down 83, December still at 67.12, and that is down 63 points on the day, well off our earlier high of 67.95. We'll be back, Rich, in just a moment, and you and I will talk a little about the cattle market and the hog trade when we come back after this. Rich Nelson is with Allendale Incorporated in McHenry, Illinois, in that Chicago area, and he joins us right now. We're going to talk about livestock in just a moment, but you and I were talking during the break here, Rich, about something coming out here in just mere moments, and you don't want anybody to forget about that. And it's a report from the NOPA, right?
I feel like you're right. The National Oilseed Processors Association. This is the group which represents about 94% of all oilseed processors here in the U.S. They have their monthly crush report, and for the month of July, the current expectation is going to be 143 million bushels. This report will be out in just about 8 minutes from now. In terms of the trade's focus, we've been at lower than last year levels now for about 6 months in a row. We'll see if what this means for us in regards to meeting USDA's pace for whole year crush, which ends in August.
Okay, well put, and thanks for bringing that up. I appreciate that a lot. On the livestock side, let's take a look here. The cattle market has been kind of bouncing around a little bit, but for the last time we checked, we had firmed up again, and now October live cattle are kind of in that upper end of the trading range today. How about this? October at 107.75. Exactly $2 off our earlier low today. That's quite a turnaround and a bounce. We're up $1.15 from our close yesterday. And December now $1.32 higher at 110.12. Exactly $2 off of its low. We're only about 30 cents from our high of the day. On the feeder cattle trade, as we switch over there, we have September up $1.87 today at 144.65. And October up $1.76 at 144.08. So tell us what's going on here with this cattle market today, Rich. Technically, it looked like that market was really running out of bullish fuel. Maybe it's getting refilled today. What's going on?
In terms of brand new news, I actually don't have too much. In fact, we're talking here this morning's early start for bids, some discussions with Texas at 110, maybe surprising people how low it would have been. Also, we have some negative news with the show list, an extra 12,000 head added to this week's offerings. So in terms of the big picture, no main new news story here for this morning, but I would suggest that maybe people are saying for the short term, we've had a good break. Let's see if we can have a little profit taking in the very short term.
Really? Okay. So on the beef cutout values that we had yesterday afternoon, I want to just get everybody up to speed because we're going to get new numbers there as well at the top of the hour. Choice cutouts yesterday were split from the selects. We had choice going down 68 cents and selects were up 32. They really narrowed up that spread. That spread's only about $2.50 wide right now. So we'll get an update here at, at 11 o'clock Central Time. Now, if we look at the lean hog trade, as we get everybody updated here, we have the nearbys showing pretty good strength today, even though they're off their highs now. October up 94 cents at 70.12 per hundredweight, and December up 85 at 64.35. Were you surprised at how much they surged ahead after the open today, now that October is in the front, or were you expecting that because they're at a discount to the cash trade?
You just mentioned a really good point. This discount is very well known, and it's very often that this market sees the expiration of the August and says maybe this October and December, which are heavy supply months and therefore low prices, maybe that discount might be too much. So it is normal to have a rebound. The size of today's rebound, though, maybe definitely a little surprising there. You could argue this might be fueled by the past 3 weeks of slaughter numbers running only about 2% higher than last year. They should be running about 3%. So maybe we're having a little extra input this time around here that we did not expect here.
All right, and of course that December contract is 80 higher right now, but it's still losing ground to that nearby October. It's still trading at roughly about a $6 discount to what the October contract is. Rich, thanks for pointing out all that information. Good to visit with you again, and we'll talk with you again soon, tomorrow morning, I'm sure. Rich Nelson happens to be with Allendale Incorporated, and he is based in McHenry, Illinois. Bunch of great guys to talk to up there. Man, they know a lot of stuff.
Yeah, it's always interesting, too, when the analysts are surprised. You know, something's going on. We got to find out what it is.
That's why we have markets.
That's right. Why we have markets and why we have so many market analysts that we get different perspectives from. Yep. Thank you, Marlon Bowling. Appreciate that.